Andrew Holland, CEO of Ambit Investment Advisors, also with us. Gentlemen, morning to both of you. Andrew, I want to start off with you. There's a bit of relief rally that is playing out now for sure, but will the uncertainty continue to remain in the Indian markets because of the overhang of when the Fed will hike rates next?
No, I don't think so. I think the Fed I think the Fed will either go October or December. So I think if we go back a few years, we had the same thing with tapering. It was just held off a little while before the Fed came back and did what they had to do. So in my mind, it's I think the volatility will go out of the markets now. And as I mentioned to you last time, that this is the most bullish I've been this year. And really feel now that we're, by the end of this calendar year, i.e. December, the Nifty will be nearer to 10,000 than it is to 8,000 today. So we're started the resumption of the bull market, so it's good news.
Okay. You said 10,000 this December?
Yes, this December.
Oh, that sounds very good. This looks like a big Diwali that you're going to have. Sanjay, that actually, the markets are playing to your beat as well. I remember you saying that at 7,900 and thereabouts you would be buyer in banking stocks. That's the one that's leading the charge today. It was up 2%, even now up 1.9%. But are you as bullish as Andrew, or do you think 8,000 could be a difficult near-term resistance?
I'm not as bullish as Andrew, but definitely I think we'll make new highs in the Nifty, which I've been saying for quite some time in this calendar year. But just going a little off track, talking about the Fed. In fact, I'm a tad disappointed with the decision today, because I think the Fed should have got this out of the way, because at this point of time, more or less the entire world was kind of anticipating this event, and more than 50 to 60% of people across the world had more or less priced it in. So why prolong the uncertainty, I thought. So if actually a 25 basis point hike had come at this point of time, the world markets would have rallied much stronger than what India is rallying today. In fact, the world is not rallying as such, because the event would have been out of the way, and we know we are done with, at least for the foreseeable future. Coming back to your question, yes, markets do look good here. Bank stocks do look good, no doubt about it. In particular, PSU banks. We've had some press reports about, government considering hiking the FDI limit on FDI limit on private banks to 100%. That's a very positive decision if they do it. And then, of course, we've had the small banking licenses. So really, I dub my hat to the current dispensation, the RBI, and I think they are trying their level best to do what they can, and we just keep quibbling about that 25 basis or 50 basis point, rate cut. But we have to look at the broader picture as so much of stuff they're doing, and that's going to benefit the banking sector in the long run.
Okay, so both of you believe that there is more upsides to this market now. But Andrew, just trying to play devil's advocate here, this is the first time in a very long time that the Fed actually acknowledged the slow growth in emerging markets like China. I haven't seen a statement from them talking about emerging markets in very long. Do you not think that that could perhaps restrict the upsides for emerging markets in general?
No, not at all. I think emerging markets are, not just priced in the Fed rate hike. They priced in, 8 to 9 months ago when their currency started to depreciate and the market started going down. The fact that China was slowing. So all the Fed is doing, I think, is just holding off whilst there's a little bit more normalcy around markets. What I think is going to happen, and why I think the volatility is going to go out, is I do think China will come out with some fiscal policy measures to boost the economy, and that will give us all that kind of relief factor in terms of that they're doing something to reinvigorate or get the economy going. And as soon as they do that, then the Fed will be on the button pressing for a rate hike in a more kind of conducive environment. That's what I think is all going to happen here. And then when I look at India, now the RBI governor doesn't have his hands tied anymore. He has to do 50 basis points. He has to do something for the economy. You can talk about the government doing things. He has to do it now. And then if I bake that in and I think about corporate earnings, which are starting to improve significantly as the both top line, even if it's slightly single digit, you're getting operational gearing and you're getting margin improvement because of lower commodity prices. That's because of a wide range of industries now. So the earnings pattern is going to be better, and that's why we're going to start resuming this bull market and as I said, be nearer to 10,000 Nifty before the end of the year.
On what, whose shoulders will this 10,000 Nifty stand, Andrew? Who will be the leading lights?
So it hasn't changed since we last spoke. It's going to be obviously the banking sector. I think Reliance will have a strong run at the back end of the year as they unfold their plans, not just for telecom but for retail. And because of our views that the yen will get weaker than Maruti. So, it's going to be the banking pack which leads us all the way up, and it'll drag all the other bits of the market with it. I think also industrials and capital goods companies like L&T as well will start to move a lot higher as the economy starts to pick up and we get more confidence. I just think there's a lack of confidence, and I think we can look at the negatives of the Fed if you want to, but at the end of the day, I think being on hold was probably okay. And I think October is when they'll increase rates after the Chinese fiscal policy has been announced, and I think that's coming very soon.
Okay, well, just take a look at the bank Nifty now. It's up more than 2% and powering ahead. The Sensex is now at the highest point of trade, up about 320 points. And names like Axis Bank, ICICI Bank, in fact, private sector banks are just kicking it out of the fence today. All your names like HDFC Bank are up about 2 to 4 odd %. Sanjay, how would you approach the banks now? Because a lot of these banks have already priced in the possibility of a rate cut from the RBI later this month. Do you think there could be more upside here in private sector banks?
Sonia, I don't really try to game any sector or any stock from a month or 2 months perspective. So if they're priced in at 25 basis points or 50 basis points, I really don't care, because I'm looking at a more secular, a more structural story when I look at things. So my view is that the banking sector as a whole has a long way to go, and I agree with Andrew that if that 10,000 target, or say the 9,000 plus target that I'm talking about, is achieved, banking sector would contribute substantially to that. So which means that we have a substantial re-rating of PSU banks, which are beaten down beyond recognition at this point of time, and as if they're all going to close down tomorrow morning, even though they may have gone up for 5 or 10% from the lows that we saw a few weeks back. Now when the 25 or 50 basis points happens on 29th of this month, they rally or they don't rally, it's very difficult to game. But issue is that where will they be 1, 2, 3 years from now? I can confidently say that select PSU banks would be at least 2x, 3x from the current levels. And of course, select private banks also would give good returns. So it's very difficult to game what's going to happen in the next 15, 20 days, 30 days, because the entire equation is so complex, both domestic factors as well as global factors. So I continue to remain bullish on banks, to cut a long story short, and every correction, every dip should be used to buy them. And most important, investment position, and don't worry about short-term trading bets.
Fair point. Sanjay, Andrew, we have to take a break. We haven't done that in quite a bit now, actually, over an hour. You're a rich man. You have always put your money in banks and in public sector banks. A lot of it is paying off now. But what else, Sanjay? Would you go to the capital goods sector and more importantly, mid-caps? There is a lot of domestic money that's that's coming into stock markets now. And what we pick up from the street is that domestic fund managers like to dabble in mid-caps. So would you look at any bets there?
Let me first correct the wrong notion that I'm a rich man, because it doesn't necessarily mean that if I'm making a recommendation or giving advice, I'm acting on it, and vice versa. So,
I agree. Definitions of rich will be different for you and for me, but go ahead.
Relatively.
Okay, coming back to your question, I think yeah, there is a lot of concern, genuine concern amongst investors on mid-cap stocks, because quite a bit of them, irrespective of the quality, have collected 30 to 40% from the recent highs that we saw a few months back, and they are causing worry because they're there in most portfolios. But you must understand the psychology of the market and the market players. whenever a rally starts to build up after a substantial correction, you know, it's the large caps which normally take the lead because they become very attractive. They're the first ones to move into institutional portfolios. And it's when they kind of, you know, get fairly valued or reach in the overvaluation zone, that's the time when, you know, the private client group as well as the institutional investors start to look for mid caps that haven't caught up or that look more attractive than large caps. So it's the kind of, you know, rotation that one sees in the market. So if you're holding on to good quality mid caps as an investor, I don't think you need to worry, even though your stock may have corrected 40% in the last few weeks or months or so. But, you know, you need to really look at it, what you're holding on to it, because when the whole mid-cap frenzy began, everyone wanted to find the next, you know, multi-bagger and get into it. So therefore, you need to reassess what you're holding. It's a good time to shuffle portfolios amongst mid-cap stocks and get into the right ones. Good quality, low debt, companies will get traction from as soon as the economy picks up. You know, good managements, good brands maybe. You know, these kind of broad parameters one should look at and, you know, kind of classify the company that you're holding in your portfolio. But mid-caps would make you money, would make you larger money as small investors, private investors. But, of course, you need to be selective there.
Okay, so you need to be selective in the mid-cap space. Yes, the mid-cap index has not done as well as the frontliners today, so the day belongs, at least up until now, to the frontliners. But Andrew Holland is also a rich man because he's been bullish on the markets ever since it hit that 7,500 level. Andrew, you know, do you think that this market has now formed a firm bottom at that 7,500 level that we hit a couple of weeks ago?
Yeah, I'm not trying to think about bottoms. I think about where we're going. And, you know, to be honest, it's, you know, unless I miss something, then I can only be bullish from here on. So, you know, markets can always test your patience. But I think we're there or thereabouts. So I'm not really thinking of where the bottom is. I just think we're going towards 10,000. So
no, the reason
that's actually the most bullish statement.
Yeah, no, the reason I asked is because, you know, less than 3 weeks ago, people were calling it a doomsday scenario because of things that were happening in China. But, okay, be that as it may, going ahead, you were telling us about a couple of pockets like banks and Reliance that could lead the market on the upside. What do you do with a pocket like Pharma, which has been the sectoral leader all through this year? How do you approach that space now?
You know, farmers, again, has always been a good place to hide, but, you know, I always get worried about the regulator in the US and what comes out overnight and which stock you're holding. So, you know, certain companies, yes, but as a sector, you know, if India's a domestic growth story, then I want to be in companies or industries which are going to benefit from, you know, the actual growth of India. And it goes back to my who supplies India. So, you know, I know that pharma can play a little part in that, but, you know, I'm paying a lot of PE for that. Whereas if I look down below some of the even large caps, you know, I can buy the broader market on 10, 11 times. You know, with growth rates of, you know, anywhere between 20 to 50% depending on the company. So, you know, there's a lot more value elsewhere, I think, in this domestic growth story of India. And, you know, they're not. Listen, the pharmaceutical stocks will move higher in this kind of index that I'm talking about, but they won't be outperformers, that's for sure. It's going to be the banking sector, as we talked about. And even PSU banks, which, you know, is not something I still like to own, will probably rent them because, you know, the prices are going to go up 20 to 30, 40% from here.
Okay. Well, Andrew, I'll come back to this question, but let me first pose this to Sanjay. You know, we aren't getting so much of positive comments from any of the CEOs we speak to. Maruti doesn't get bigger than that and more successful than that as a stock price and as a seller of cars. Bhargava was telling us that, you know, demand is now in single digits for them. Demand growth, that is. That double-digit numbers were all stockists piling up. Actual demand from the retailer is in single digits. Sanjay, where is this demand generation likely to emerge? It's certainly not emerged so far from the CEOs we have spoken to.
You know, Lata, as far as, you know, passenger vehicles, as far as commercial vehicles are concerned, I think a major boost will come when interest rate starts to fall, because we know that 80 to 90% of sales are based on EMIs and credit availability, etc., from banks, and financial institutions, as NBFC, etc. I think the offtake will come from there. Obviously, at this point of time, there is a concern arising out of some concern arising out of rural demand because of kind of a mixed bag feedback coming on monsoon
exactly.
and
Sanjay,
consumption patterns across the country.
That's exactly what the bunch of Chennai guys we spoke to, and many of them are CV makers or financiers. Their point is, if fleet owners or even truck owners see growth, they don't mind that 25 basis. Their point seemed to be that it's not as if rate cut spurs them to buy a truck or lease a truck. It is business which makes them want to lease a truck, and at that time the 1/4% doesn't really matter much. What I'm asking is, at what point do you see that traction in earnings coming? Will it come in the second quarter, whose earnings are due now? Will it come in the third quarter? When do we start seeing it in P&Ls as well?
I think the traction that I see from looking at numbers, talking to our team of analysts who've been interacting with companies, and of course I've been talking to companies too. My sense is that the December quarter should start looking positive. Festival season, one should see some amount of pickup coming in. And today the problem that is there in the system is, you correctly said, it's not got to do with that 25 or 50 basis point. It's got to do with the availability of funds for industry, availability of absolute money being available to actually kickstart the whole process of the whole business cycle. So that's the reason why I think the policymakers, RBI, whether this is the finance ministry and the government, are attacking it the right way. They're trying to address the core problem that are facing the industries, where maximum amount of money is NPAs, etc., problems are stuck with. The banking sector, which needs to be sorted out so banks can lend more. So once you start seeing that happening, which you're already seeing first signs of, I think in about 3-6 months' time, you'll see the trickle-down effect coming on to industries who actually draw money. Because I know for a fact that if you talk to people who are into manufacturing and business, they're actually not being able to draw on their limits and facilities at times, because liquidity is an issue that's there in the system as much as cost of funds. So the combination of two, once the whole entire finance machinery gets oiled up in the system, then we will see the entire demand coming in, as well as the impact going on to the bottom line. Probably around December, March quarter, we'll start seeing things pick up, and obviously the markets will move a little ahead of that. That's the reason why both Andrew, and I feel the same thing, that we will see new highs this year, because in anticipation of December and March results, markets and prices will start moving up.
Okay, so December or the March quarter. Andrew, what about you? When do you think that inflection point in earnings will come through?
I think it's already happening. The companies that we speak to in this quarter, you're correct, and it's what I said before. You're seeing single-digit kind of top-line growth, but because of operational gearing in India, it has a bigger impact on your bottom line, and because of the raw material cost, in terms of how much it's helping the margins, you're just going to be surprised. I met a specialty chemicals company a few weeks ago. I said, listen, my top line is 4 or 5%, but my bottom line profitability is 32% higher. These are the kind of things we all miss because we're too gloomy about what's happening in China or the dumping on this, but everyone's benefiting. Across the industries. Obviously, there's some industries like the steel industry themselves are not being helped, but across industry it's really helping. So if Maruti's seeing single-digit profit growth, they're benefiting from the tailwinds of a depreciated currency and lower raw material prices. So they're going to show good growth. So I think this quarter you'll start to see the benefits of what I've just said. By the next quarter, it will really start to play through, and that's why we're all in agreement the index is going to be higher.
Okay, well, just one follow-up to a stock that you have been quite bullish on for a while, which is Bharat Forge. That stock has been under pressure for some time now because of the slowdown that we've seen in the North America truck demand, and now with exports as a pie slowing down for our country, there are some more concerns there. What do you do at a time like this?
That's to me, right?
Yes.
So Bharat Forge was one of our very early calls, and actually we moved away from Bharat Forge into other auto component makers, so that was some time ago. Again, you know, it was a great story at the beginning because you had two things going for Bharat Forge. One was the offshore operational gearing, and then the onshore operational gearing, which played through in the share price, you know, kind of going up 4 or 5 times. But then it became richly valued, and then we looked at other companies in between. So, you know, Bharat Forge is a company I don't need to kind of look at right at this moment. But the valuations have come down a bit, so you know we'll probably look at it again. But there's other component companies in the auto side which we can look at. Basically, only on the domestic growth story in India, and that's the ones we're focusing on.
Yep, that's actually the last question to you as well, Sanjay. What kind of mid-cap stories would you stop looking at these kinds of auto ancillaries which have given a lot of returns, but perhaps their day is over? What kind of mid-cap segments, sectors or themes you would chase?
I think anything that's linked to the economy, that's linked to the infrastructure rollout, aggressive spends that will happen in areas like roads, railways, because that's where the government is going to kind of allocate a lot of money. Companies, in fact, a lot of people are missing out that we are talking about, the Digital India rollout. There are a substantial number of companies who are going to participate in the eGov program, who are going to participate in, ancillary and equipment supplies to these companies. So a whole combination of these companies, which are all kind of mid-cap and small-cap companies, will benefit substantially from this entire spend, whether it's on Digital India, infrastructure, railways, those kind of money that's going to be spent in the next 3-5 years.
All right, gentlemen, thank you. It's been long since we've spoken to you, so we'll let you guys go now. And thank you for giving us your view. So that's a very optimistic set of experts that we have today, both believing that the Nifty will be much higher by the end of the year compared to where it is currently.